This message is not for the faint of heart, but for those who truly want to change and become a master of themselves and their finances. Although paying off debt can be very difficult, it is possible with proper preparation and persistent effort. The following actions can be taken to settle your debt. Assess your current financial situation. Start by gathering all your financial information, including your outstanding debts, interest rates, minimum payments, and income. This will give you a clear understanding of your overall debt and help you create a plan. Assessing your current financial situation is essential to paying off debt. Here's a breakdown of what you need to do. Gather all financial documents, collect your credit card statements, loan statements, and any other documents related to your debts. Make sure you have the most up-to-date information available. List your outstanding debts. Create a comprehensive list of all your debts, including credit cards, personal loans, student loans, car loans, and any other types of debt you may have. Take note of the name of the creditor, the outstanding balance, the interest rate, and the minimum monthly payment for each debt. Calculate the total debt amount. Add up the outstanding balances of all your debts to determine your total debt amount. This will give you a clear picture of the magnitude of your debt. Determine interest rates. Look at the interest rates associated with each debt. Higher interest rates typically cost you more money in the long run, so prioritize those debts for repayment. Note minimum payments. Make a note of the minimum monthly payment required for each debt. This is the minimum amount you must pay to avoid late fees and penalties. It's important to pay at least the minimum on time for each debt. Assess your income. Calculate your monthly income from all sources, including your job, freelance work, or any other means of earning money. You need to earn more money than you spend. Understanding your income will help you determine how much you can allocate toward debt repayment. Determine your monthly expenses. List all your monthly expenses, including rent or mortgage, utilities, groceries, transportation, insurance, and discretionary spending, Pornhub, Netflix, etc. This will help you understand your spending habits and identify areas where you can cut back to free up more money for debt repayment. Once you have gathered this information and created a comprehensive picture of your financial situation, you can move on to the next steps of creating a budget and developing a debt repayment plan. 2. Create a budget. Develop a comprehensive budget that outlines your income and expenses. Allocate a portion of your income toward debt repayment while ensuring you can cover your essential needs. Setting up a budget is essential for handling your money wisely and allocating money for paying off debt. Here are some tips for creating a thorough budget. Calculate your income. Determine your total monthly income after taxes. Include all sources of income such as your salary, freelance work, side gigs, investments, and any other regular income you receive, including your spouse if you have one. You need to make more money. List your essential expenses. Start by listing your fixed expenses. The term fixed expenses refers to recurring costs that are consistent month to month and are necessary to meet your basic commitments and needs. These costs tend to have a fixed amount that you must pay on a regular basis and are less adjustable than discretionary costs. This typically includes rent or mortgage, utilities, groceries, transportation costs, insurance premiums, loans, or debt payments, subscription services, monthly fees for services like internet, cable TV, streaming platforms, or gym memberships, childcare or education costs. Assign specific amounts to each expense, based on your current spending patterns and obligations. Track your discretionary spending. Discretionary spending, also known as variable expenses, refer to non-essential expenses that are more flexible and can be adjusted based on personal choices and priorities. These expenses are typically not fixed in amount and can vary from month to month. Review your past bank statements and receipts to identify your discretionary spending habits. This includes expenses like dining out, entertainment, shopping, subscriptions, and other non-essential items, and miscellaneous expenses. Categorize these expenses and assign an estimated monthly amount to each category. Or just stop spending and hurting your pocket. Identify areas to cut back. Analyze your discretionary spending and identify areas where you can reduce or eliminate expenses. Consider packing lunches instead of eating out, canceling unnecessary subscriptions, or finding cheaper alternatives for certain expenses. You don't have to be lit every weekend and buy the most expensive champagne to impress anyone, and that will not help your chances of sleeping with her. This will help you free up more money to put towards debt repayment. This will not be forever. Set debt repayment goals. Determine how much you can afford to allocate toward debt repayment each month. Ideally, try to contribute more than the minimum payments to accelerate your progress once there are no penalties for early payoffs. Set specific goals for paying off each debt, such as target date or amount. Don't be like the headless chicken. Allocate funds for savings. It's important to include savings in your budget to build an emergency fund and cover unexpected expenses. It's wise to save a year's salary and put all other money into building and buying assets. Aim to save a percentage of your income each month, even if it's a small amount initially, tracking and adjusting. Monitor your spending regularly and compare it to your budget. Make adjustments as needed to stay on track. Consider using budgeting apps or spreadsheets to help you track your income, expenses, and debt repayment progress. Remember, the key is to strike a balance between debt repayment and maintaining a reasonable quality of life. While it's important to allocate a significant portion of your income toward debt, ensure you still have enough to cover your essential needs and avoid accumulating more debt. Stop blowing money away. By creating a budget and sticking to it, you'll gain better control over your finances and make consistent progress toward paying off your debts. 3. Set your obligations in order of priority based on interest rates. Identify your debts. It is customary to pay off high-interest debts first because they end up costing you more money in the long run. If you like the psychological high of seeing debts wiped off, you may want to concentrate on smaller obligations first, the debt snowball strategy. Prioritizing your debts is an important step in your debt repayment journey. Here are 2 popular methods you can use to prioritize your debts. High-interest debt, first debt avalanche method. List all your debts in order of their interest rates, from highest to lowest. Allocate your available funds for debt repayment to make the minimum payments on all debts. Allocate any extra funds toward the debt with the highest interest rate while continuing to make minimum payments on the other debts. Once the highest interest debt is paid off, redirect the funds that were going toward it to the debt with the next highest interest rate. Repeat this process until all debts are paid off. This method saves you the most money in interest payments over time, as you tackle the debts with the highest interest rates first. Smallest debt, first debt snowball method. List all your debts in order of their outstanding balances, from smallest to largest. Make minimum payments on all debts. Allocate any extra funds toward the debt with the smallest balance, while continuing to make minimum payments on the other debts. Once the smallest debt is paid off, take the funds that were going toward it and redirect them to the debt with the next smallest balance. Continue this process until all debts are paid off. The debt snowball method focuses on achieving small victories and provides a psychological boost as you see debts being paid off more quickly. This can help keep you motivated throughout your debt repayment journey. Both methods have their advantages, and you can choose the one that aligns best with your financial goals and personal preferences. The key is to stick to your chosen method consistently and continue making regular payments to gradually eliminate your debts. 4. Cut costs. Look for ways to cut back on your spending. Reduce discretionary spending, negotiate over fees, cancel pointless subscriptions, and look for everyday opportunities to save money. Use the money you've saved to pay off debt. Reducing expenses is a crucial part of paying off debt faster. Here are the top secret strategies to help you cut back on expenses and save money. Review your budget. Take a close look at your budget and identify areas where you can make cuts. Analyze your spending habits and determine which expenses are essential and which ones can be reduced or eliminated. Cut back on discretionary spending. Trim down expenses related to non-essential items or activities. This can include dining out, entertainment, shopping for non-essential items, or excessive travel. Consider finding free or low-cost alternatives for entertainment and leisure activities. Negotiate bills and expenses. Reach out to your service providers such as internet, cable, or mobile phone companies and negotiate better rates or discounts. Often, they have promotional offers or loyalty programs that you may not be aware of. It never hurts to ask. Cancel unnecessary subscriptions. Review your subscriptions and memberships to identify those you no longer need or use frequently. Cancel any subscriptions that are not providing enough value or are redundant. Save on groceries. Plan your meals in advance, create a shopping list, and stick to it. Avoid impulse purchases and take advantage of sales and discounts. Consider buying generic or store brand products instead of branded items. Shopping with a list and avoiding food waste can significantly reduce your grocery expenses. Lower energy consumption. Be mindful of your energy usage by turning off lights when not in use, using energy-efficient appliances, adjusting thermostat settings, and insulating your home properly. These small changes can lead to substantial savings on utility bills. Use coupons and discounts. Look for coupons, promo codes, or discounts before making any purchases. Websites, apps, and loyalty programs often offer deals that can help you save money on various products and services. Evaluate transportation costs. Explore ways to save on transportation expenses. Consider carpooling, using public transportation, or even biking or walking if feasible. If you own a car, ensure it is properly maintained to improve fuel efficiency. Reduce credit card interest. If possible, transfer high-interest credit card balances to a card with a lower interest rate or consider consolidating your debts into a lower interest loan. This can help you save on interest payments and make your debt more manageable. Track your expenses. Keep a record of your expenses to understand where your money is going. Use apps or budgeting tools to track your spending and identify areas where you can make further adjustments. Remember, every small expense reduction adds up over time. Redirect the money saved from cutting back on expenses toward your debt repayment. By consistently finding ways to save, you'll have more funds available to pay off your debt and achieve financial freedom faster. 5. Increase your income. Explore opportunities to increase your income, such as starting a business, taking on a part-time job, freelancing, or selling unwanted items. The additional income can be dedicated to accelerating your debt payoff. Increasing your income can be a powerful way to expedite your debt repayment. Here are the best strategies to help you boost your income. Take on a part-time job. Consider taking on a part-time job in addition to your current employment. Look for opportunities that align with your skills and schedule. This extra income can be specifically earmarked for debt repayment. Freelance or offer services. If you have marketable skills, consider freelancing or offering services on a contract basis. This could include writing, graphic design, web development, consulting, tutoring, or any other skills you possess. Platforms like Upwork, Freelancer, or Fiverr can help you connect with potential clients. Monetize your hobbies. Explore ways to turn your hobbies into income-generating activities. For instance, if you enjoy crafts, you could sell your handmade items online. If you have a talent for photography, you could offer your services for events or stock photography. Rent out assets. If you have extra space in your home, consider renting it out on platforms like Airbnb. You can also rent out your vehicle, camera equipment, or any other assets you own that are in demand. Start a side business. If you have an entrepreneurial spirit, consider starting a side business. Identify a niche market or a problem you can solve and develop a product or service around it. This can be an excellent long-term source of additional income. Sell unwanted items. Declutter your living space and sell items you no longer need or use. You can use online platforms like eBay, Craigslist, or Facebook Marketplace to reach potential buyers. Take advantage of cashback and reward programs. Utilize cashback websites, credit card reward programs, and other loyalty programs to earn extra money or rewards when making purchases. While not a direct income boost, these programs can help you save money that can be redirected toward debt repayment. Explore passive income streams. Investigate opportunities for passive income, such as investing in dividend stocks and rental properties, or creating digital products like e-books or online courses. While building passive income takes time and effort upfront, it can generate ongoing income in the future. Remember, increasing your income requires dedication and hard work. Choose opportunities that align with your skills and interests, and be prepared to invest time and effort into them. By dedicating the additional income you generate toward your debt repayment, you can accelerate your progress and achieve your financial goals faster. 6. Consider debt consolidation or refinancing. If you have multiple high-interest debts, you might want to explore options for consolidating your debts or refinancing them into a lower interest rate. This can make it easier to manage your debt and potentially reduce your overall interest payments. Debt consolidation or refinancing can be effective strategies to simplify your debt repayment and potentially save money on interest. Here's how you can explore these options. Understand debt consolidation. Debt consolidation involves combining multiple debts into a single loan, which can help simplify your repayment process. This can be done through a few methods. Personal loan. Apply for a personal loan with a lower interest rate than your current debts. Use the loan to pay off your existing debts, leaving you with one consolidated loan payment. This can simplify your repayment process and potentially reduce your overall interest payments. Balance transfer credit card. Look for credit card offers that allow you to transfer your existing high-interest credit card balances to a new card with a lower introductory or promotional interest rate. This can provide temporary relief from high interest rates and give you an opportunity to pay off the debt more efficiently. Home equity loan or line of credit. If you own a home, you may be able to use the equity you have built to secure a loan or line of credit with a lower interest rate. Use the funds to pay off your higher interest debts and focus on repaying the consolidated loan. Assess the terms and costs. Before pursuing debt consolidation or refinancing, Carefully evaluate the terms and costs involved. Compare interest rates, repayment terms, fees, and any potential penalties. Ensure that the consolidation option you choose offers significant benefits and aligns with your financial goals. Consult with financial institutions or lenders. Reach out to banks, credit unions, or online lenders to discuss your options for debt consolidation or refinancing. Provide them with information about your current debts, interest rates, and financial situation. They can provide you with personalized advice and help you understand the available options. Be mindful of your financial habits. Consolidating or refinancing debt can provide temporary relief, but it's important to address the root causes of your debt and develop responsible financial habits. Create a budget, track your spending, and avoid accumulating new debt to ensure long-term financial stability. Remember, debt consolidation or refinancing may not be suitable for everyone. It's crucial to carefully assess your financial situation, compare options, and consider the potential impact on your overall financial health. If you're uncertain about which path to take, consider seeking guidance from a financial advisor who can provide tailored advice based on your specific circumstances. 7. Negotiate with creditors. If you're struggling to make payments, reach out to your creditors and explain your situation. They may be willing to negotiate a lower interest rate or a more manageable payment plan. Negotiating with your creditors can be a proactive step to take if you're facing difficulty in making payments. Here's how you can approach the negotiation process. Review your financial situation. Before reaching out to your creditors, assess your financial situation thoroughly. Determine the specific challenges you're facing, such as job loss, medical expenses, or other financial hardships. Gather supporting documentation if necessary to substantiate your claims. Contact your creditors. Reach out to your creditors as soon as possible. Many creditors have dedicated departments or representatives to assist customers facing financial difficulties. Contact them via phone, email, or through their customer service channels. Explain your situation. Be honest and transparent about your financial hardship. Clearly explain the reasons behind your financial difficulties and how it has affected your ability to make timely payments. Provide details about your income, expenses, and any significant changes that have impacted your financial stability. Request assistance. Express your willingness to fulfill your obligations and your desire to work out a solution. Ask for their assistance in finding a mutually beneficial arrangement that would help you meet your financial obligations while addressing your current challenges. Propose alternatives. Offer specific alternatives that would make your debt more manageable. This could include requesting a lower interest rate, a temporary payment reduction, a modified payment plan, or even a settlement offer if appropriate. Be prepared to negotiate. Creditors may propose their own solutions or counteroffers. Be prepared to negotiate and find a middle ground that works for both parties. Emphasize your commitment to repaying the debt and your willingness to cooperate. Get any agreements in writing. Once you reach an agreement, request written confirmation from the creditor outlining the terms and conditions of the new arrangement. This will help ensure that both parties are clear on the agreed upon terms. Remember, not all creditors may be willing to negotiate, but it's worth the effort to reach out and explore your options. Many creditors understand that it's in their best interest to work with you to find a solution rather than risk non-payment. Effective communication and proactive engagement can increase the likelihood of reaching a favorable resolution. If you find it challenging to navigate these negotiations on your own, consider seeking assistance from credit counseling agencies or financial professionals who specialize in debt management. They can provide guidance and support in negotiating with creditors and developing a workable repayment plan. 8. Stay committed and consistent. Stick to your budget, make regular payments, and avoid taking on new debt. It requires discipline and patience to pay off debt, but maintaining consistency will help you make progress. Staying committed and consistent is crucial to successfully paying off debt. Here are some key principles to keep in mind. Stick to your budget. Your budget is a roadmap for your financial journey. Be diligent about following your budget and tracking your expenses. Continuously evaluate and adjust your budget as needed to ensure it aligns with your goals and helps you prioritize debt repayment. Make regular payments. Set up automatic payments or reminders to ensure you make your debt payments on time. Consistency in making payments will help you avoid late fees and penalties while steadily reducing your debt. Avoid taking on new debt. While you're working to pay off your existing debt, it's important to avoid accumulating new debt. Resist the temptation to rely on credit cards or loans for unnecessary purchases. Focus on living within your means and prioritizing your financial goals. Stay motivated. Paying off debt can be a long journey, so it's essential to stay motivated along the way. Set milestones and celebrate your achievements as you reach them. Find support from friends, family, or online communities who can offer encouragement and accountability. Consider debt tracking tools. Utilize debt tracking tools or apps to monitor your progress. Seeing your debt decrease over time can provide a sense of accomplishment and motivation. Seek professional help if needed. If you find it challenging to stay on track or manage your debt independently, consider seeking guidance from credit counseling agencies or financial professionals. They can provide valuable advice, debt management strategies, and personalized support to help you navigate your debt repayment journey. Remember, paying off debt takes time and perseverance. Focus on the progress you're making and the financial freedom that awaits you. By staying committed, consistent, and disciplined, you can overcome your debt and achieve your financial goals. 9. Celebrate milestones. As you pay off each debt or reach specific milestones, reward yourself, within reason, to stay motivated and acknowledge your achievements. Celebrating milestones along your debt repayment journey is important for maintaining motivation and acknowledging your progress. Here are the best ways you can celebrate milestones without compromising your financial goals. Treat yourself within reason. When you achieve a significant milestone, it's okay to reward yourself with a small, budget-friendly treat. This could be something you've been wanting for a while, such as a favorite meal at a restaurant, a movie night at home, or a small item that brings you joy. The key is to ensure the celebration fits within your budget and doesn't derail your overall financial progress. Enjoy low-cost or free activities. Celebrating doesn't have to be expensive. Look for low-cost or free activities that you can enjoy. Have a picnic in the park, take a hike, have a game night with friends, or enjoy a day of relaxation at home. These activities can be just as enjoyable and fulfilling without straining your budget. Share your achievements with loved ones. Share your milestones with friends and family who understand and support your debt repayment journey. Their encouragement and praise can be a meaningful celebration in itself. Additionally, consider sharing your progress on social media or within online communities dedicated to financial goals. Your achievements may inspire others and create a positive feedback loop. Reflect on your progress. Take time to reflect on how far you've come in your debt repayment journey. Recognize the hard work and dedication you've put in to pay off your debts. Celebrate the positive changes you've made in your financial habits and mindset. Acknowledge that each milestone brings you closer to your ultimate goal of financial freedom. Set new goals. Once you've celebrated a milestone, it's important to set new goals to maintain momentum. Identify the next debt you want to tackle or set a target for paying off a specific amount of debt within a certain time frame. Having new goals in place gives you something to strive for and keeps you focused on your financial journey. Remember, the key is to celebrate responsibly and find joy in the progress you're making. Celebrations don't have to be extravagant or costly to be meaningful. By acknowledging your achievements, you'll stay motivated and continue moving forward on your path to debt freedom. 10. Seek professional help if needed. If you're overwhelmed or struggling to make progress, consider seeking advice from a financial counselor or debt consolidation service. They can provide guidance tailored to your specific situation. Seeking professional help can be a valuable step if you're feeling overwhelmed or struggling to make progress with your debt repayment. Here are some perfect options to consider. Financial counselor. A financial counselor is a professional who can help you assess your financial situation, develop a personalized plan, and provide guidance on managing your debt. They can help you understand your options, create a realistic budget, and offer strategies to overcome financial challenges. Look for accredited financial counselors who are knowledgeable in debt management and can provide unbiased advice. Credit counseling agency. Credit counseling agencies are nonprofit organizations that specialize in providing guidance and support for individuals facing debt problems. They can help you review your financial situation, negotiate with creditors, and develop a debt management plan. They often offer educational resources and workshops to help you build financial literacy and improve your money management skills. Debt consolidation service. If you're considering debt consolidation, a debt consolidation service can help you navigate the process. They can assess your debts, negotiate with creditors on your behalf, and consolidate your debts into a single payment. Be sure to research reputable organizations and understand any fees or terms associated with their services. A financial planner or advisor. A financial planner or advisor can provide comprehensive financial advice, including debt management strategies. They can help you create a long-term financial plan, prioritize your goals, and provide guidance on budgeting, investments, and other aspects of your financial life. Look for certified financial planners, CFP, or financial advisors with expertise in debt management. When seeking professional help, it's important to do thorough research, check credentials and certifications, and read reviews or testimonials to ensure you're working with reputable and trustworthy individuals or organizations. Consider scheduling initial consultations to discuss your specific needs and determine if their services align with your goals. Remember, seeking professional help doesn't indicate failure but rather a proactive step toward gaining clarity and finding solutions. These professionals can provide valuable insights, tools, and strategies to help you overcome your debt challenges and achieve financial stability. Remember, paying off debt takes time and dedication. Stay focused on your goals, make adjustments as needed, and keep moving forward. Paying off debt is a journey that requires time, dedication, and perseverance. Here are some key reminders to help you stay focused and motivated. Set clear goals. Define your debt repayment goals and make them specific, measurable, achievable, relevant, and time-bound. SMART goals. Having a clear target in mind will give you a sense of purpose and direction throughout your debt payoff journey. Stay motivated. Find sources of motivation to keep you going. Visualize the benefits of being debt-free, such as financial freedom, reduced stress, and the ability to pursue your other goals. Remind yourself of these benefits regularly to stay motivated during challenging times. Make adjustments along the way. Review and adjust your budget and debt repayment plan periodically. Life circumstances and financial situations can change, so be flexible and willing to adapt your approach as needed. Be open to exploring new strategies or seeking professional advice if necessary. Celebrate small victories. Acknowledge and celebrate each milestone you achieve along the way. Recognize the progress you're making, no matter how small. Celebrating these victories will boost your confidence and reinforce your commitment to your debt repayment goals. Find support. Surround yourself with a supportive network of family, friends, or online communities who understand your financial goals and can provide encouragement and accountability. Sharing your journey with others can help you stay on track and find motivation during challenging times. Focus on the long-term benefits. Remember that paying off debt is an investment in your future financial well-being. The sacrifices you make now will lead to greater financial freedom and opportunities in the future. Keep your eyes on the long-term benefits and stay committed to your goals. Practice self-care. Managing debt can be emotionally and mentally challenging. Take care of yourself by prioritizing self-care activities such as exercise, relaxation, hobbies, and spending quality time with loved ones. Maintaining a healthy balance in your life will help you stay resilient and focused. Celebrate the journey. Remember that paying off debt is not just about reaching the end goal but also about the personal growth and financial knowledge you gain along the way. Embrace the journey and the lessons it teaches you about money management and financial responsibility. By staying focused, resilient, and dedicated to your goals, you'll make steady progress in paying off your debt. Keep your eye on the prize and remember that each step you take brings you closer to a debt-free future. However, there is a difference between bad debt and good debt. Get out of bad debt and into good debt. Bad debt, which includes credit card debt, auto loans, and other types of debt, makes you poorer. This kind of debt is used to purchase liabilities. Ironically, it is this debt that those who claim that debt is terrible profit from by reselling to the inadequate. This is a topic for another video. I hope you enjoyed the video, and if you would like to see more, hit the subscribe button, hit the bell, and can't wait to see you guys in the next video.